About common mistake number 2, and this is actually not having any plan whatsoever for the psychological aspect of Hello everybody, welcome back to Day Trading School with me, Amy. Today I'd like to discuss 3 common mistakes that I believe lead to the fact that you just don't become a profitable day trader. I'm not going to focus on the problems, on the mistakes themselves, but I do want to talk how you can actually solve these problems and have a couple of, useful tips and tricks for you. And I really hope that this is going to be useful for you. Make sure to subscribe to my YouTube channel, support this video by just liking it, and leave a comment in the comment section down below. Tell me what you are struggling with. And do you have some, advice for everyone here, really? Because we're all in the same boat. We're all on, on a quite a difficult journey. So I think it's always useful to interact and to share your own experience with our community. All right, so let's get started with today's program. Now, to explain mistake number 1, I'm going to use the example of GBP USD and Euro USD of last week. In particular, I'm going to focus on the 16th and 17th of September because this was very interesting. We're getting closer to a very important, support area. And most people here, I actually joined a couple of live webinars and I was listening to what people were thinking of GBP USD as well as Euro USD, and the question was, are you bullish or are you bearish? And most people, they were actually bullish, right? They were saying that they were looking for buying opportunities because the reason is basically we're getting closer to an important, support zone. Plus we had a breakout price, basically came back and broke out of this rising flag. Now, you may agree or disagree that this is an ascending triangle or this is a rising flag. Those types of things, spotting chart patterns as well as candlestick patterns, is a very subjective thing. Let me say this just as a side note. Now, as I said, most people were, bullish, so that means they were looking for buying opportunities. Now, this is actually a common mistake. And guys, it's actually a common mistake that occurs quite often in range-bound markets because the explanation is actually a psychological one, and it has a lot to do with the fact that imagine a scenario that you were used to trading a trending market, and then the market basically switches over from the trending situation to the range-bound situation. So it's going to take some time to, to basically adapt to that new situation. You really need to be very flexible in your thinking as a day trader. Now, let me explain to you in detail. Now, guys, let me show you something. Usually what we don't understand is that markets usually, 80% of the time, they basically end up ranging. This is a trending market, and then eventually markets basically enter a new stage of ranging. This is a new stage. And this is where the problem starts, right? Because we all know how to trade range-bound markets. What we would do is we would, sell at a well-respected resistance zone and we would buy at a well-respected support zone. Now, the problem is that when the market, enters this new stage, we don't necessarily understand that this is a new stage. We're still very busy thinking that the trending market may just continue, right? And this is what we are looking for. We are always looking for a buying opportunity in order to make sure that we can basically continue this trending market. But the situation is that we've entered a new stage. Now, the problem with range-bound markets is that after 2 to 3 times of touching a well-respected resistance zone or a well-respected support zone, the idea of waiting at at these zones and looking for either selling or buying opportunities doesn't work very well anymore, right? That means usually you can do this 2 to 3 times, and after that you just have to be, very careful. And what you can actually do is, let me show you something. Now, what you have to do, or the psychological, solution to this scenario is, after touching a well-respected resistance or support zone, let's say, 2 to 3 times, what you can do is pay attention to reliable chart patterns or candlestick patterns. And I had explained this one in my last webinar, and I had said that I can actually see that we may face a particular trouble because of this candlestick pattern right here. As you can see here, right, we touched a well-respected support zone. We had a fake out. Price was moving up, but then all of a sudden we had this scenario where basically, the bulls basically tried to push the price up. On the other hand, the bears managed to mark a new low, which is not a very good signal. That means this is usually a signal for you to understand that the overall situation is that the market is exhausted. That means you need to be very careful as a day trader. Common mistake number 2, and this is actually not having any plan whatsoever for the psychological aspect of day trading. And now my answer or my solution is not a motivational speech. I'm not trying to enhance your mood, because this is absolutely rubbish, to be honest with you. Usually what happens is, people, they just say, yeah, well, listen, I've been day trading for many, many years, but I am not a consistently profitable day trader. The answer, what you usually get on the internet is, well, listen, I've been there too, and day trading is very difficult. And then they're just trying to sell, a funded account to you or something like that. Guys, please stop that, because that's just rubbish. I can tell you, for the psychological aspect of day trading, you need practical solutions. You need a practical answer to that. Right? It is the same like, trading. There you need a strategy, a plan, and the same for the psychological aspect. You need a strategy and a plan. And, you learn something about risk management, you learn something about fundamental analysis, about technical analysis, such as chart patterns, candlestick patterns. And then when it comes to the trading, when it comes to the psychological aspect, everyone just starts, with all these motivational speeches. For what? For what exactly? So let me show you something that is a powerful tool you can actually apply to your trading routine. Now, my solution to that problem is create a list of, thoughts that you usually have while trading. That means, or actions, write down the actions you basically take and that basically lead to failure, and the ones that lead to success. That means you've got two columns where you have, on the one hand, the failures, the mistakes, the obstacle, hindrance, etc. And on this side of the paper, you basically write down what works very well. What do you have to do to basically reach a particular goal, right? So the question here is, what actions lead to success? And here the question is, what actions lead to failure? For example, if I wait too long, I will miss out on good trading opportunities. And that usually leads to the problem that, people, they just want to be first when the London trading session opens. Because of that thought, believe me or not, but yeah. So, or another problem is that people just, think, oh, I don't know what to do while waiting. And let me tell you one thing, trading is not like gaming. This is a real job. That means you don't open up a chart just because you feel annoyed or because you have nothing else to do in your life. And that's the reason why, in order to get rid of the problems, what you have to do is, and this is now a psychological explanation, what you have to do is you need to find an alternative. If you just tell yourself not to do these mistakes, you will find yourself repeating these mistakes again and again, because your brain requires an alternative. And the alternative here is, for example, tell yourself that there are tons of opportunities on the market. You don't need to be, the first one to open up a trade. And Always make sure that you've got a clear trading plan and a clear trading strategy, and always plan what you're going to do while waiting if this is something that, causes usually a problem for you. That means find an alternative. Write down the problems and find an alternative for those problems, and then try to do these for the next 66 days. And I explained in a separate video already how that works, because it usually takes your brain 66 days to turn an action into a habit. Another example is this one right here. I need money now, right? And an alternative to this is just get yourself, a part-time job, a second, a third source of income, instead of, buying a funded account, right? Or if self-discipline, let's say lack of self-discipline is a problem. Self-discipline is a problem. In this case, find an alternative. And don't just write from now on, I'll be self-disciplined. No, write down what are you going to do. If this is something you have to learn, if self-discipline is something you have to learn, that means teach yourself the patterns that lead to self-discipline, right? Get up at 6 o'clock and then do a workout at home or whatever. So try to teach yourself self-discipline rather than, running away from it and then buying a funded account. I don't know. I've never had a funded account and I'm not a massive fan of funded accounts, but I mean, if it works for you, I'm very happy. But I would say, rather than, if you struggle with self-discipline, teach yourself self-discipline instead of running away from that problem. Right, now let's end today's program with mistake number 3, which is using tons of indicators. And there is actually a psychological reason for that, why you're doing it. When you start off your trading career, or when you basically tell people you're interested in day trading, in investing, predicting price direction, etc., what people usually tell you is that this is going to be very difficult for you. So your natural and normal reaction to what people say is, you will now start finding a complicated answer to a seemingly complicated situation, right? That means you start looking for a perfect combination of indicators. Now, the problem is, first of all, the market is never perfect. That means trying to find a perfect answer to something that is never perfect is basically useless. That's number 1. And number 2 is, when people say this is going to be complicated, that's absolutely rubbish. It can be complicated to them, but this is not a very objective statement, isn't it? You can basically tell people you have to learn something about fundamental analysis, technical analysis, such as, chart patterns, candlestick patterns. You need to know something about risk management, blah, 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 right? But you can't say this is going to be difficult, this is going to be complicated, I've been there too, etc. The problem is people are very much focused on themselves, and then they don't realize what they're actually saying. You understand? So that means try to ignore that. Try to focus on the simple steps that trading basically involves. Make sure to ignore what people's opinion about trading is. Try to focus on your trading plan, trading strategy, and learn everything you need to learn about trading. Alright guys, this is it for today, and make sure to leave a comment in the comment section down below. Basically tell me what types of indicators you use, whether you use indicators or not. That'd be very interesting for me. My webinar on Friday is going to be not on my channel but on A1 Trading, and I'm going to talk about fundamental analysis. So if you're interested in that, why don't you join the free webinar? So see you there.